The middle class used to be this symbol of stability and upward mobility. The idea was simple: get a good education, land a solid job, buy a home, and just watch your life improve year after year. But today, for so many people, that whole story feels like a fantasy. They aren't poor, but they're not really getting ahead either. They just feel stuck. So today, let's get into the structural reasons why. And wow, this quote just hits the nail on the head, doesn't it? It perfectly captures that feeling of being squeezed from both sides. You're not struggling enough to get government help, but you are nowhere near wealthy enough to feel secure. You're just caught right in the middle, running on a treadmill to stay in the exact same place. This feeling is so common now, it actually has a name: vibesession. It's that feeling you get in your gut when you see headlines saying the economy is booming, but your own bank account is telling a completely different story. It's proof that the official numbers don't always capture the real stress of everyday life.
Okay, so how do we even get here? Well, the first major shift happened at the very foundation of middle-class stability: the job itself.
Think about it. For decades, especially after World War II, a traditional job was your ticket to the middle class. And it wasn't just about the money. It was a whole promise. A promise of stable hours, a pension, and healthcare. This model created this really clear, predictable career path that let the middle class really flourish, hitting its peak in the late 1970s.
And this really shows you the stark contrast between that old promise and what we have today. We've shifted to something economists are calling fissured workplaces. What that really means is employers have basically ripped out the lower and middle rungs of the career ladder. Those stable, full-time jobs, they're being replaced with short-term contracts and on-demand ghost work. The traditional path to move up, it's just gone.
All right, so on one hand, you've got this crumbling career path, and on the other, a massive financial vice is just tightening. And this is really the heart of the problem. While paychecks have pretty much flatlined, the cost of just living a middle-class life has absolutely skyrocketed. The big three, housing, healthcare, and education, are just eating up a much, much bigger piece of the pie, leaving less for, well, everything else. I mean, just look at housing for a second. In some markets, a mortgage can now eat up 50 to 70% of a professional's take-home pay. So home ownership, which used to be the cornerstone of being middle class, has become this suffocating financial burden for so many. So what happens when your income just can't keep up with costs? Well, people turn to debt. Credit cards, personal loans, they become this temporary bridge to maintain a lifestyle, or sometimes just to cover the basics. But here's the thing, it's not a real solution. It's a trap, one that makes you more financially fragile and makes it even harder to ever get ahead. And as if all that wasn't enough, there's a third, massive force that is completely rewriting the rules of the game for everyone: technology and artificial intelligence. For the longest time, we thought automation was something that happened in factories, right? To those routine, physical jobs. But AI is a whole different ballgame. It's what's called skill biased. It automates cognitive tasks, the kind of thinking and analysis that has always been the work of white-collar professionals. And look, this isn't just some abstract theory. Take a look at this data projecting AI's impact. The jobs with the highest risk of being displaced aren't on the factory floor. It's professionals and managers. I mean, these are the exact jobs that make up the core of the middle class. This is exactly what it means when we talk about the middle tier being compressed. And this whole trend, it has a name: the Great Decoupling. See, for decades, it was simple. Companies get more productive, workers get paid more. That link, that relationship, it's broken. As you can see here, technology is pushing corporate profits to all-time highs, while the share of all that wealth going to the actual workers has plummeted. The gains from progress are no longer being shared with the people doing the work.
Okay, so you've got a broken career ladder, costs are soaring, and AI is changing everything. What does stability even look like now? It means we have to start thinking about the economy in a completely new way.
The real dividing line today, it isn't just rich versus poor anymore. It's between people whose wealth is tied to their time, trading hours for a paycheck, and people who own assets, like businesses or stocks or even intellectual property that generate wealth all on their own. And that means the whole formula for success has been turned on its head. The old way was pretty linear, right? Get a job, climb the ladder. But the new path? It's all about being dynamic. It's not just about having a job anymore. It's about financial literacy, participating in assets, and constantly adapting your skills. That passive stability we used to count on is gone. Active navigation is the new normal. So look, the middle class isn't failing. The entire economic environment has fundamentally shifted around us. Trying to rely on the old rules is what makes people feel so stuck. The squeeze is absolutely real, but understanding why is the first step, which leaves us with the big question. Are we prepared for this new reality?